Hey everyone, stick with Us versus Herd. If it's your first time here with the content, hit subscribe. If you want to get notifications when we go live, tap the bell. We go live Monday through Friday, 30 minutes before market open. If you want to join the UBH fam, our community, links are below in the description to our Discord and our options trading group on Facebook. If you're here right now, say what up, say what good morning. Make yourself known. S&Ps are up 15, Dow's up 73, NASDAQ up 50 points on the NASDAQ. What's going on? Jesse, Rodney, Jeff, Samir, how we doing? Good morning. How are we doing this morning? We're gonna get paid. We're gonna get slaughtered. What's the plan? What's the plan? I think there's a little bit of good and a little bit of bad in my portfolio this morning. Hopefully more good than bad. You know what I mean? Michelle, Daniel Ring, Carlos, Reggie, Lion. Are the home sales reports coming out today? Let's see here. Where are we? Oops, sorry, I was going the wrong way. The new home sales reports are coming out, in an hour. So 10 a.m. Eastern time. 10 a.m. Eastern time. So yeah, and then tomorrow we're gonna have durable goods, capital goods, and consumer sentiment. But yeah, new home sales. Let's see what Home Depot's at right now. Home Depot's flat at open here, so we'll see. Yo, Wanabi. Sorry, I hope I didn't butcher your name. I'm sorry if I did. All right, so let's get to it. Let's look at what we're going to be doing here at market open. We have the jobs report. Jobs report came in 4.4 million. What was the expected? The 5-week total is now at 26.4 million jobs lost. We've now lost all of the jobs since all the jobs that were created since the Great Recession, 2008-2009 time frame. What was the expected? It's not saying here. Oh, it's saying slightly more than expected. So I'm guessing they were expecting like 4 million, 4.3 million, something like that. The total remains elevated as individual states continue to try to cope with the massive influx of new claims. We also have oil rallying due to U.S. production cuts. Yo, Polo, Hafiz, Mason. Okay, so yes, it's right where we're at. Let's see here. Okay, so let's get into it. Mason, I'm gonna get to Tesla in a second. Let's talk about some earnings. We have a position on Domino's. If you weren't in our Discord yesterday in Power Hour, we're doing a contest that whoever guesses or comes close to Domino's opening price, I'm gonna send them a Domino's pizza. So that's what we're looking at this morning. That's what we're looking at this morning is where Domino's opens up at. Right now it's trading at 382, basically flat on Domino's. And there was a lot of hype on Domino's because Chipotle did well, obviously. They saw same-store sales up 7.1%. The company reported earnings of $3.07 a share, revenue of $873 million. They're going to hire 10,000 people. Domino's previously forecasted U.S. same-store growth in the range of 2 and 5% and global sales growth of 7 to 10%. So they did withdraw their 2 to 3 year outlook, citing that there's uncertainty due to the pandemic, which that is normal. What's going on, Faiz? Mr. Morris. That pizza. I'm gonna order it. I'll order it local, or I'll send like gift cards or something. You guys can order it when you want to order it. Whoever guesses it. Fanny, how you doing? Daniel Salyers. So overall, Domino's did well. However, they eliminated their guidance. They withdrew their guidance, so we don't know how they're going to be doing in the future. So they're probably going to be doing all right. But I mean, Domino's ran super, super hard, obviously. So I do have an Iron Condor currently on Domino's. I did get a... Okay, so Domino's, I did get a $19 credit. I did put an order in for $10 at open because it's really flat, but I don't think I'm gonna get it. I just wanted to have it ordered queued up. Worst case scenario, I just replace this order and try a different fill. I'll probably get like $15. I think I'm gonna get around $15, but maybe there's gonna be some takers for $10 in the morning. Maybe someone will buy this for $10, you know. But I might have to move up to $15. So we'll see. We'll see what happens. We'll see what happens. Who picked Domino's ticker is terrible. I don't know. Mason wanted me to look at Tesla. He cut the line. I'm just kidding. Or sorry, was it Tesla or Snap? I think it was Snap. Sorry, Snap. Yesterday. Snap. Snap, I mean, obviously, they had a lot of momentum yesterday. They are down a little bit. I did lose about $500 on Snap yesterday. I do have some calls. Going into next week. I have the 16 strike calls for next week. I have the 18 call. I have one 18 call for this week. You know, pretty much chilling. These were up quite a bit here. The 18 call was up 300%. The 16 call for next week's up 489%. However, those were basically protection because I lost on these short strikes that I bought back. So I bought back the short strikes. I kept the long strikes, and probably going to be down a little bit on that at open, but we're just going to let it ride because I mean, those short strikes cost me a total of $69 at close yesterday. They were worth $358. So the long strikes were worth $69. As you can see here, my cost $69. They're worth $358. They're probably going to be down a little bit, but you know, I only paid 69 cents or $69 for these. So, you know, we're gonna let it ride. I mean, I think that if Snap is holding above here, I mean above 15, it's probably going to rally back up to 18. I don't know about 19 area, but I'm targeting this 18 area here. I mean, I don't really count this run back in January because it was a little bit overdone, but there is a double top in here around the 18. So if it gets up to like 1750, 1780 area, I'm probably going to try to offload my positions. You know, David, you had to enter yesterday before market close to get the free pizza. It's all good. We're gonna find out. We're gonna find out who gets it. We're gonna find out who gets it. It might take me a little bit. I'm going to announce the winner in Discord because I have to go through the chat and figure out what everyone's prices were. But it's gonna be fun. Yo, Billy, what's going on? So that's what's looking like that for Domino's Snap. Also, I do have a position on Netflix. So the one that's high, I do have a debit spread for 22 days out, but my main position right here is this I have this 420 call for next week expiration. Right now we're kind of riding. It's riding like the 418, 415 area. So my target was 440. I'm sorry. My target was 440 on this. However, it got rejected 3 times at 430 yesterday. So not looking good. But we're hanging on. We're down about 11% on that position. So not terrible, but you know, we're gonna have to see what Netflix wants to do at open here. What do you think gold is going to do today? Gold's up, rallying up a little bit here. I mean, it's looking like I mean, if gold could come up to like the 1780 area, definitely would be interesting. Right now it's at 1746. So I want to see what it does here. Is it going to try to retest these highs and push to 1800, or is it going to make like another high in here and then go lower? You know. But right now it is looking pretty bullish, where you have a low here, a low here, and a low here, and it could potentially have the momentum to break through 1800. So. Yeah, so Target is down. Their CEO was on CNBC this morning. Let me see if I can pull that up here. So their CEO was on this morning. Target shares tumble as retailer says first quarter profits will be hurt by higher costs. So this is what we're gonna see in retail. They're gonna have higher revenue, but their costs are going to be greater because they're paying their employees more, they're hiring more people, so their costs are more. So just be mindful of that when trading like Walmart, Target, or any retailer, Home Depot, any retailer that is staying open right now. Is yes, business is booming. However, some of that profit and revenue is being offset by higher expenses. So, you know, I think their online sales grew by like 275%. Target said it had seen more than a 7% increase in same-store sales. The retail is spending more on labor. It's had single days when the volume of order pickup was twice as high as Cyber Monday. I mean, that's pretty crazy. I mean, I think Target is a good long-term investment, but I think the issue is right now is because of the virus, because of coronavirus, there's so much unknown in business. And I was listening to the call. He even said like the reason why we withdrew our outlook is because we're trying to understand how the customer is reacting in this pandemic and how they're going to be impacted when this pandemic is over. He said, if you guys listen, it was actually a pretty interesting interview. He was saying that, you know, after this is done, the behaviors of the consumer is going to change, and they're trying to figure out how that's going to change. You know, obviously, less people are going to be going into the store. Online sales are going to be bigger. Delivery pickup's going to be bigger, which they were already shifting to anyways due to Amazon. But this, you know, coronavirus kind of just like kicked them over the edge to say, hey, you got to do this right this second, right now, you know. So it was pretty interesting, you know, with that being said. I mean, yes, they're doing well. They will be doing well in the foreseeable future. Online business is good, but it's going to be offset by higher costs, and also, you know, they need to employ more people, and they have to pay them a reasonable wage. Otherwise, I mean, these people are on the front lines. If you feel like you're not getting paid enough, you're going to strike. Stores are going to be shut down. It's going to be bad for the company. So it's better for them to pay people more money to go to work if that's where they want to work, and you know. So read this, watch the if you have the chance, watch the interview that they did on with the Target CEO this morning. That's why they're down. They didn't have earnings, but they were talking about, you know, lowering expectations, like, hey, things are good, but like, listen, they're going to be offset by some of these other expenses here. So chill out. You know, in terms of targets, like 1 year, I mean, it's down to 100. I definitely, if it comes back down to like the 90-95 range, I'd like to get long here. So I definitely want to see what happens here at 100. It bounced right at 98. So I might be looking at a target long. I generally don't like to trade target because it's, as you can see here, it gets really choppy. You know, even though there's a downtrend or there's like an uptrend, it gets really choppy, and I don't really enjoy trading it that much. But maybe I'll buy something for like a month out and hold it, something like that. Maybe if it comes down to 90-95, maybe today. Hopefully it does. If it drops down to 90-95, I definitely think that I'll be buying a call on target for like, let's see here. I would probably go into June expiration. June expiration. IV is going to be a little bit higher, but we'll see what happens because of the drop. So, I'm just gonna let it sit there, see what happens. But I was looking at Target this morning as well. Economy is crap. I think gold will keep getting bought. Yeah, I mean, gold, U.S. dollar is going to be going down the drain, guys. So, short the dollar. You can't print trillions of dollars without repercussions. And Daniel, I do agree with you with gold. However, I do think that it's going to take a while for the gold trade to come along. I do think gold rips up with the market. It goes down with the market when the market sells off. And right now it's overall just kind of following the market. If once we say a divergence in gold is kind of the time to start getting in. When the market is starting to go down and gold is going up, that's when there's going to be a divergence in the price of gold and the stock market. And that's when people are going to start loading in more gold versus like right now, the market is up, gold is up. When the market's down, gold has been going down. So, it's pretty much been keeping that. I mean, even though gold is ripping up pretty large, just be mindful of where we're at, But the market has been doing relatively well as well. So, once I start seeing more divergence in gold in the stock in the stock market, in stock prices, I'm going to probably lean a little bit heavier into gold, but right now I haven't been touching it. AMD, DUT. What's going on, Christopher Wong? If you're just joining, say what up. Good morning. Hey guys, real quick, I want to thank you all for subscribing and supporting this stream. It's been incredible. We're I think less than 70 people from hitting 1,000 subscribers on this channel, which is amazing because I just started this channel, I think back before the whole coronavirus thing, thinking like, okay, I need to split off the live stream. I was kind of nervous about it. First couple streams I had like 5 people, which is kind of normal because no one really knew. But I appreciate you guys for supporting the live stream, supporting the other channel. I mean, the support you guys show every day, watching the videos, come and hang out. It really means a lot. So thank you. Yo, Colin, what's going on, man? Glad you're here. Glad you are here. AMD, yeah, let's look at AMD right now. And AMD is just ripping. What I've been watching the last couple of days is what's happening up here. Are we going to top out at 59 area? I mean, it got rejected here in the 58s, almost 59. It's making a push for it, but I don't feel safe going long here, and I don't feel safe going short here. So for me, I'm just going to chill and see what happens. I mean, you might be able to put like a strangle play on because, let's see, volatility is rather low on here. So you might, if leaning which way or the other, you might be able to put on a strangle play, might be the play there. You might be able to put on like a bullish strangle. Let's take a look. Let's see how much like a bullish strangle. If you want to be bullish on it, let's say for May expiration, if you want to be bullish on this, get a little protection. I mean, it's only going to cost you like 580. Probably something like that. Maybe you want to go a little bit like that. So let's call it a bullish strangle right here for 22 days out. The only downside to this is if you only got 22 days, and if it lands in between your strikes here, you're going to be paying out some money. But you could easily, what you could do, I mean, it's a little bit risky, but what you could do, depending on where it goes, let's say it bounces down, you could start selling some premium in here. So you can start selling like, once this premium gets a little bit more rich on the put side and you're still bullish on it, you can start selling this to offset your losses on the call side. So you got some potential maneuvers here. So if you buy a strangle, you can do a couple things. You can just leave it, hope for the best. You can adjust it. You can, if it gets rejected here, let's say with 58. So what you could do actually, you could actually buy the 58 because you're hoping it busts through, get a little bit wider, come a little bit shorter on the put side, and then depending on where it goes, because it's right now supports at like 50. So you can, if it bounces down, you can click your premium, and then you could put another debit. You could put another put spread here. So if it bounces down to 50, 51 area, you could sell this, keep the call, so you'd be done with this. And then if you're still bullish on it, you could sell a couple put spreads or something like that. You know, you get the idea. But you can maneuver out of it. But what I would do if I'm bullish on AMD right now, but you're scared, buy some protection, or you could even buy some cheaper protection down here like 45. I mean, I highly doubt that protection will be triggered, because as soon as it gets down to like 47, 48 area, it's been getting bought up. So, you know, you want to be careful. Yo, Dan, appreciate you. I've been enjoying the Discord banter the last week or two. Yeah, the Discord pops off. You know, Discord pops off. No V-necks. I bought some new T-shirts. What do you think about this? It's nice. Daniel Rings long BA and USO. So BA has been going down with the airlines, but it looks like I was thinking about going long BA, but I've been kind of staying away from it, because around 135 it's been bouncing here. So it bounced pretty good on what was this, Tuesday. Bounced back here last week. Sorry, someone's calling me. Bounced back here last week as well. So 135 is bounce area. Would have put a play on, but I was playing Netflix. I didn't want to go too deep. I've been burned last couple times on Boeing, so I was like, you know, I'm gonna chill on Boeing for a while. Docu. So Docu, I did do a day trade. Right now I'm just day trading Docu. I had a nice day trade on there yesterday. Some really nice ranges, as you can see. I bought the dip again. It does look like it's making some higher lows here on DocuSign, and it's been pushing up. So every time it's come down to, like, for the last week or so, come down to like the 95 area, it's been getting pushed up. So right now, this range is getting extremely, extremely tight right now. So, you know, if we're looking at the range here, you know, if we're looking at this right here, you know, sooner or later, it's going to pretty much break out of this triangle. You can even push it up here if you want, whatever you want to do here. It's about the same effect, but we're looking at a, you know, it's basically consolidating, and it's going to, I'm guessing it's going to explode higher. So what I might do for DocuSign is probably try to put up some bullish positions on here. The only thing about DocuSign is they only have monthly expirations, which, I mean, I guess is good. They also have earnings coming up on, June 4th. So we got some time. So no big deal. June 4th. So it might be a good time to get into the June expiration. See if we can get it to run a little bit. IV's at 61%, 51% for May right now. So, you know, you can get some good deals. However, there's only $5 above 100 right now. There's only $5 wide. I don't know if they're going to adjust this at open today or not. They should add some more strikes here. Now that it's above 100 and been pushing above 100, they need to add some more strikes here to make it, you know, $2 250 wide strikes, or, you know, at least 250 wide strikes. You know, only $5 in the Junes as well. So that's the only thing you're not given a lot. You're not given a lot of options right now for, you know, DocuSign. Any thoughts on TXN? Let's see here. I mean, it looks TXN, Texas Instruments, does look like it's moving up really, really choppy though. But as you can see, it's moving up. I mean, if you can handle the chop of this, you're gonna be all right. Yo, Fernando, yeah, I'm working. I have a lot of content on YouTube, obviously, and I am working on more materials, because one of the biggest drawbacks that people say is, hey, it's hard to enjoy your live stream when I have no idea what you're talking about, because I don't know what a put means, or in the money, or extrinsic value, or credit spreads, or anything like that. So, you know, I'm working on that. The one thing that I did do that will make it a little bit easier, I'm starting to add some value for newer traders. So with the impact report that we put out weekly, I also put out options trade ideas, and we do a monthly live Q&A, which is basically like a webinar for you guys that want to join, and essentially just answer questions that beginners may have, or anybody really, but basically just try to cater to any skill level in there, whether you're new, whether you're not new, whether you've been trading for 2 years and you're unprofitable, you know, stuff like that. You know, just try to cater to different skill levels, because I definitely agree that I would say it's hard to get into my nightly videos and hard to get into the live streams, because what I'm saying is like foreign to you. You don't know what I'm talking about, and I get that. So I'm trying to figure out how to balance that out. Okay, so the market's opening in about 4 minutes. We got Domino's flat. So let's see if we can get a fill for my iron condor. It's going to be tough. It was tough getting in. It's going to be tough getting out, because liquidity on Domino's is pretty bad. Iron condors, are you pet birds? Yo, specialist, what's going on? If you're just joining, say what up. If you guys could do me the favor, hit the like button, I'd appreciate it. Amazon ripping up. Amazon actually got upgraded this morning, which is why they're up. Goldman Sachs upgraded Amazon. They're at 2,400 right now. I mean, it's unstoppable. It's unstoppable. That's all you can say. I mean, like no TA, technical analysis, Amazon right now, you ride the momentum until it gives out. That's all you can do. And then when you ride the momentum down, I mean, yeah, it's going to give up its gains eventually, but is it going to give it up before or after 2,500? You know what I mean? Same thing with like Tesla. I mean, you can't do any technical analysis. Yeah, you can go to Option Alpha. You can also go to tastytrade.com as well to learn. Yeah, Option Alpha is a good resource, and tastytrade.com as well. They have a lot of resources on there. I've been putting people over there as well. Like Tesla, I mean, you can't really do technical analysis on these things when you're looking at like numbers. And I mean, this chart makes a lot more sense than Amazon. Amazon's just ripping up just because that's where the momentum is, you know. But right now it's getting stopped out around 750 area, so you can kind of bet on that. And like Daniel Ring was saying the other day, it really likes the 730 area for some reason. It really does. So, you know, maybe play some iron condors around that 730 area, you know. Yo, Army Joe, what's going on? Hope you're staying safe. Keith, you need to get your rest, man. It's okay. It's all good. Get your rest. You work hard. You're on the road 24/7. My stream's not that important. I'm glad you're here, but it's not that important. We're staying safe, Joe. My daily routine is to wake up and watch the stream, then look at markets when it opens. Keith, that's what's good, man. Appreciate you. Yo, goldfish without the D, goldfish. Yo, Christian, Johnny Moore, Tito. It's good morning. All right, so we got market opening here in 20 seconds. So if I'm quiet, I'm trying to figure out my Domino's position here. So just give me a second while it tries to figure out. Right now Domino's is down a little bit. We're at 376.16. So let's see. Let's see who's we're gonna announce who gets the free pizza in the Discord a little bit later today, because I gotta go through the chat and see what the pricing was. So let's see here what we can do on Domino's right now. Option pricing hasn't opened up yet, so kind of all over the place. Let some contracts trade on Domino's. Bid the ask is rather wide right now, so let's see if we can get a fill here for let's try to get out of this trade. Come on. So far, no takers. So that's the one thing about trading like kind of a liquid options is that it gets a little hard to get out of these trades, but Domino's dropping pretty good. Still in a good zone here, so let's see if we can just get Played some Domino's yesterday night. Snap needs to drop about 30%. All right, so I got out. Probably gave up a little bit too much money. Made a couple hundred bucks on Domino's. So Domino's, I got a $19 credit yesterday. Bought it back for 17 bucks today. So we made $200 and $203. Pretty good. Probably would have made more if there was liquid options and and you were able to get out of there, but you kind of have to overprice it, and that's what it is. But I'll take a couple $100 win on. I'll take a couple $100 win on Domino's for sure. Probably could have held on to it, but whatever. It's illiquid. You don't want to mess with it. You don't want to mess. Whoa. So I was able to get out of Domino's. So what I did, kind of cover my Domino's trade real quick. The reason why I don't show my order execution is because it shows even though it's in private mode, it still shows my account number on the order screen. So I don't know why Tastyworks hasn't fixed that. And I really don't. I've gotten my account hacked before on the live stream, and I really, really, really don't want to get hacked again. I really don't. But that was a while ago. It was also a Robinhood account, so who cares about that? But I've learned my lesson that my exposure is pretty public, so that's why I try to limit the information as much as I can. Because hey, why not? There's money in here. you know there's money in here. Well, I'm glad I got out of Domino's because that thing's dropping like a rock, man. 368. But looks like Domino's, let's see the opening, where this opened up. I'm gonna have to check the exact opening price here, but it looks like it opened up around like 380.15. So whoever got around 380, I gotta look at if you got around Yeah, Christian, you can they have the web platform. I just don't like to use the web platform because it's slower. I like to trade on the desktop platform because it's a lot faster. The web platform, you got to go through Google Chrome or Firefox, and it is what it is. Netflix ripping up pretty good here. I'm still down 5% on my 420 call here, so I'm still down $90, $80, but we're getting some money back. So my target on there is 445, 440 area on Netflix, so we'll see if we can get there. I do have next week expiration, so I don't like to trade on. So you can trade on Tastyworks mobile, Tastyworks desktop, which I'm using, and Tastyworks web. The web platform I don't really enjoy. I don't really enjoy the mobile platform either. All right, USO. Let's see, Snap. Who said Snap needs to drop about 30%? I don't know about that, man. I don't know about that, honestly. Okay, so USO. Let's see what's going on with USO. USO is green right now. It's pushing up, but looking relatively weak. Oil in general is pushing up right now because of XOP. I'm getting hammered in. Oil's pushing up in general due to U.S. potential. That hasn't happened. U.S. production cuts, and then also Trump said yesterday he would destroy Iranian gunboats. So that also pushes oil higher with a threat on the Middle East. So I don't know. Seems like a well-timed tweet. You know, I don't know what's going on, but just, you know, call me crazy, but I mean, you know, yeesh. So that is why oil is pushing up. Nothing but better for low oil than good war. Yeah, I mean, in general, war recovers economies. I mean, World War II saved the economy. You know, just saying. It employs people, gets people working. A lot of people die, sure, but in general, wars are good for the economy. Unfortunately, you know, we're building things, we're making things, we're consuming things. But I mean, to get out of this recession or depression or whatever it's being classified these days, I mean, nobody wants to go to war. I mean, at least the American people. I don't know about the people that make the decisions, but I know that most people would not want to go to war, you know? All right, so we got Netflix still ripping up here. Snap is trying to go green. It's down 30 cents right now, currently. XOP, I'm down a little bit this morning, down in $50, but it's topping out around 46. So I've been watching on XOP. It's been trying to make a recovery here. It's been getting topped out around the 46 area. It hit 46 area yesterday, got rejected. Is it going to do the same today? If it rips up to 47, I think I'm going to close my position and just forget about it. Gas is $1.20? Jeez. I don't know. I haven't actually been to the gas station for a minute. So actually in Chicago, I have no idea. Let's see. I have no idea what gas is going on right here. Okay, so let's look at the gas buddy here for Chicago. So gas, wow, $1.50. Let's check the northwest side. Chicago Northwest. Under $2, under $2. That's pretty good. Not amazing, but good. Not amazing, but good. You know, used to paying closer to $3 or over $3 around here, and Netflix is really ripping up. I don't know. I kind of want to close my position a little bit here on this spike. Right now the market's moving rather slow. The S&Ps are moving up pretty good. Let's see what SPY is doing right here. SPY 281 right now on SPY. Yeah, I think we're going to try to push 288 again. Like I was saying last night. We were blessed not hit as hard with COVID as other cities. Gas in Madison are all under $1. Wow. Yeah, I mean under $2 here is, you know, is definitely a blessing. All right. So it looks like Netflix can it pop up above here or what? Seems to get stopped out right around here. Let's see if we can push up. We need Netflix to push 440. That's what we need. That's what we need. But at least we got out of Domino's. Domino's, I mean, that was a disaster with the liquidity. But we got really nice and clean out of that open. So glad I was able to get out of that. Let's see what else we got going on here. I don't really have any other trades working right now, so we're gonna have to find some new things to do. Let's see Apple. Apple's pushing. Apple, if we could we might try to push 287, 288 area. However, it's got some massive downgrades, but if we can push back up to here, you know, the reason why it fell is because they had those massive downgrades. Let's see if we can get that moving back up again. McDonald's earnings come up soon, might be a sympathy play. Yeah, so I'm going to be looking at McDonald's, and I think they're going to be facing the same situation. However, I mean, I think Domino's does a little bit better because of their delivery service. McDonald's has to use DoorDash and Uber Eats for their delivery, and I don't know how much they pay I don't know how much they pay Uber or DoorDash or any of those vendors to have those partnerships. And maybe they don't pay anything at all. Maybe DoorDash and then pay them money to be on their platform. I don't know. I'm gonna have to look into that, but I don't think their delivery is going to be as good as Domino's or a pizza place, because they've had a delivery infrastructure since the beginning, since they've started basically. And I mean, I do like that it's pushing like up to here to 190. Looks like it's going to want to break out here, but we'll see. Docu's hanging tight at 101. Netflix is chilling. The one thing that scares me about Disney is how long their parks are going to be shut down for. You know, so one of these guys reporting. So Disney's not till May 5th. I'm a little bit concerned about their cash burn with the parks being closed. No one can go on, they have a lot of resorts worldwide. They have, the thing is, Disney, it's not just Disney Plus, they have resorts yet. So the cruise ships are not moving, hotels are not filled, resorts are not filled. People are not buying their entertainment packages. People are not buying tickets. I don't even think you can go, let's look up. I don't even think you can go buy a ticket right now. Like if you go Google tickets, let's say I want to go to Florida, like I don't even think you can't even buy a ticket for, well, you can now. Okay. So you could buy a ticket, but hey, this is actually a good deal. This is actually a good deal. That is not a bad deal, honestly. Like we go to Disney like every year and pay a boatload of money, but that's actually not bad. Not bad. Might be looking into that. There we go. Crazy. All right, I don't know if Netflix is gonna push above here. What's the 5 minute look like here? 5 minute looks pretty good though, but I don't like it's getting stopped out here. Figured Disney will jump back to 105. So we know that Disney's going to take a big hit. I guess the question is what's priced in and what's not priced in. That's the question right now. Going into all the earnings right now is what's priced in and what's not priced in. That's the big question on deck right now. All right, so this 15-minute candle here is important. We're about to snag some Disney park tickets. I wonder what Disneyland in California is going for. So I don't want to go to Florida again. I went there last year. It's terrible. All right, that's what I'm talking about. Netflix, break through that. Okay, so they do let you buy also. They also let you buy Disneyland tickets as well. Still, I think they took it offline for a little bit because I remember seeing it was offline, but now it looks like they let you buy again. Probably because like, please guys, buy. While there's still much uncertainty with respect to the impacts of COVID-19, the safety and well-being of our guests and employees will remain Walt Disney's company's top priority. As a result of this unprecedented pandemic and in line with direction, the Disneyland resort theme parks, hotels, and downtown Disney area are currently closed. So everything's closed with no sign of it opening up again. And the one thing that you guys know, if you've ever been to Disneyland or Disney World, the one thing that you guys know is that, all right, I think I'm gonna close out Netflix. I'm not gonna ride it too much longer. We're gonna get off here 22% here. Let me just hold on, guys. Hold on. Hold on. All right, got a decent fill. Got a decent fill. So we made 460 on that bad boy. Netflix. So Netflix, I put the position on yesterday from 1955, sold it for 24.15. Yeah, look at that. Look at that hammer. Man, got out of that just in time. I probably could have rode it to 440, but I feel like it was starting to get a little reckless after 20% profits. Like it was looking a little rocky there at pushing up to 440. I don't know. For some reason, this area is very troublesome right now if you're day trading it. Let's lock in those profits. So I'm trying to get something going here. So right now, you know, we're up about 663 in realized gains. So now I got to figure out what to do with the rest of the crap I have in here. So I'm actually not down $600 on Chipotle. It's a debit spread. Max loss is $196. So it's just not liquid. I don't even think I can close it out for a penny right now. I tried to get $1 back, wouldn't let me. Down a little bit. We're down a little bit on my snap calls right now, but we're still profitable on them. So we're just gonna chill. Lock in some profits. Try to reload. I mean, Netflix is probably gonna go inside, but I mean, Netflix just ran $13. So I'm gonna take the money, take the 460 profits, and just keep rolling. You know. Take profits, redeploy capital. Take profits, redeploy capital. That's what we're about. You know. Yeah, I mean, Netflix probably going to run, but if there's anything that you know about Netflix is there's always going to be another opportunity. You're always going to have another opportunity with Netflix, so don't stress it. Don't stress it. I've been trading Netflix for a long time, back when it was like 80s and 70s and stuff like that, and here we are at 400s. And the one thing that I do like about Netflix is it's unpredictable, in the sense that it doesn't follow the market trends, and it gives you a really nice break mentally from the overall market, because in the market you're thinking like, oh, jobs reports and all this stuff, and unemployment, and you know, people getting sick. But Netflix doesn't care about any of that. So it gives you a nice break, like mentally trading Netflix, because you don't really think about all the sick people, you don't think about death, you don't think about unemployment, you just kind of think about what Netflix is going to do. And Netflix has always done what it wants to do. It's going to do what it's going to do. Why is Domino's down? I think it was priced in. Also, they withdrew their guidance for the next 2 years because they don't know what's going on. Also, I mean, it ran incredible. I mean, look at this run. the run is still intact here. You know, it's still the trend is still intact. So even though it's pulled back quite a bit, I mean, it might be getting into buy zone here around 360. Get 360 area, might bounce back up to 380. So, you know. Joe, Nick, something interesting about Disney that the people that had trips canceled have to rebook this year. That means they're at least hopeful to reopen in 2020. Yeah, but they could change that at any time. You know what I mean? They could change that at any time. You know, some were speculating that they might not even actually open until after January, like till January, which would be a disaster. It would be a disaster. And also, for Disney, there's no sports on right now, and ESPN was already bleeding cash to begin with. Now they're bleeding even more cash because they don't have any sports. Milan INO. And yeah, I don't know too much about the stock. I typically, like I said, I stay out of pharma, but I mean, this pretty crazy. I mean, it could definitely push. I don't generally trade stocks like this, but yeah, I mean, it's been making a massive run. It could push back up to, like, you know, the 15, 16 area for sure. And Netflix, yeah, look at that. NFL draft is today. Yeah, it's going to be interesting. I don't know. But basketball is canceled. Baseball's canceled. I mean, just crazy. Nick, can you talk about the USO reverse split 8-1 and its effect and options? So essentially, it's not going to change anything with your positions. There's basically going to be 2 options chains and your positions until everybody's out of those expirations. Man, Netflix really popping. I don't have any regrets of selling though. I mean, I sold it was like at 433. I mean, gonna hit 440, but I don't have any regrets. So yeah, I mean, James, don't be too concerned. I mean, it's not gonna really mean anything for your position. Now it's gonna impact the ETF a bit with the realignment and the pricing, and it really depends on what people want to do. I mean, that USO has been trading like garbage. I mean, if you're looking at oil's up what, 23%, USO up 5%, and if we're looking at the back months on oil here, I mean, these back months, they went more into, they started adding more of the August contracts into USO. I mean, that's up not nearly as much as the June. However, there's a bit of, I mean, there's a separation in price here for sure. I mean, it's all messed up. So oil's a mess right now. So they're trying to figure out how to save the fund. And what's that Netflix call going for right now? Oh, last price was $25. I sold it for $24.15 on Netflix. 420. I had the 420 call. So yeah, they're going for about $24, $25. So, you know, we caught the top pretty good there. Didn't leave too much on the table. Yeah, Tobin, break out your Bears hat. I mean, we're not going anywhere. XOM. Yeah, I mean, I think with all the other companies and any earnings right now, you have to ask yourself, what's priced in, what's not priced in. I mean, this drop might have priced in where it should be, so that's why I've been selling more premium for earnings, and so far it's been working out pretty good. I mean, I sold premium on the banks. The banks were within expectations in terms of the stock price. I mean, they missed their profit targets, revenues, and all that. But you know, when you see a drop like this heading into its first earnings, you have to start to figure out. Same with Disney. Any stock that has earnings, and any stock that I'm playing earnings right now, I try to figure out what do I believe is priced in, what do I think is not priced in. And right now, I think a lot of it is priced in for ExxonMobil. So, you know, premium going into next week, relatively low, so doesn't look like it's going to be a good target to sell premium in. Might be best just to sit out and then see what the report has and trade the aftermath. I mean, you can make a lot of money trading the aftermath. You know, Netflix, I didn't have a position on Netflix because I really wasn't sure if it was going to explode or do anything. And Netflix was priced in. So I put a trade on yesterday, and then I just made $460 on Netflix trading after the report comes out. So the benefit of that is you get to understand what's in the report. You let the price settle, figure out what the price action is doing and how the price action is reflecting that, and moving forward. So that's why I like to trade after earnings a lot. Just because I'm not trading it through earnings doesn't mean I'm not interested in that. Like Netflix, I wasn't really interested in trading it before earnings or through earnings, but I was definitely interested in it once it flattened out here around 415, 420 area. So that's why I bought the 420 call, and thankfully we ripped up this morning and not the other direction. That was the risk. I was like, man, I was really hoping we were going to rip up yesterday, but yesterday on Netflix was a consolidation day. As you can see here, we got a solid consolidation here. Now we're pushing back up. The risk to that was, it bumped up to 480, even though it doesn't show on here because that was pre-market. It doesn't really matter to the 1 year chart. You don't really see that. But the downside here was, I can remove this alert here, was, did it top out here at like 445, 446, and it's going to come back down to 400, 380 before trying to make another run? And that was the risk. Disney broke 100. Let's see if it bounces here. So Disney, Disney it doesn't look good though. So you just want to be careful with it. I would much rather go long in the lower 90s and the higher 90s for sure, for myself. But it can bounce. It can bounce here for sure. For sure, it could bounce. But DocuSign going up to 103. Nice. Okay, so got a couple minutes here just to run through what we got going on after hours today. Intel, E-Trade, Verizon, American Express. I might be looking at American Express and Intel earnings here throughout the day. So I'll keep you guys posted in the Discord. I'm going to hop off here. I got to run. So I'll be in the Discord. I'll announce the winner to the Domino's Pizza. Stay safe, stay green. It's us versus herd.